Welcome to the Deep Dive, your shortcut to being well-informed. Today we're jumping into the fiscal 2025 fourth quarter and full year earnings call for Aehr Test Systems. Now, this is a company that's, well, it's really in the middle of a huge transformation, a massive pivot.
Yeah, pivot that's basically reshaping their whole outlook.
Yeah.
We'll hit the latest numbers, sure, but the real story is the strategy shift.
And where they see the growth coming from, it's pretty explosive stuff they're talking about.
Absolutely. And look, for anyone watching the semiconductor world, reliability, efficient testing, it's becoming critical, especially with these incredibly complex, high-value chips.
Right.
Aehr Test Systems is right there at that intersection. And this call, it really gives you a fascinating window into how they're navigating it, actually how they're shaping it.
Okay, so let's quickly run through the recent results then. For the full fiscal year 2025, revenue landed at $59 million. That's down about 11% from the year before. Their non-GAAP gross margin, that's the one adjusted for certain items, giving a clearer operational picture, was 44%, down from nearly 50%, 49.6% previously.
Right.
And non-GAAP net income was $4.6 million, or C4.056 a share. Though we should definitely mention the prior year had a big one-time tax benefit, so it's not quite an apples-to-apples comparison on the net income line.
But here's the kicker.
Yeah.
The thing that really points to where they're going, despite those headline numbers.
The bookings.
Exactly. Annual bookings surged, up over 24% to $61.1 million for the year.
Wow.
Yeah. And this isn't just noise. It's driven largely by AI processor burn-in systems. Plus these specialized things called wafer packs and burn-in module boards, basically the critical interfaces for the testing.
So demand is strong underneath the surface.
Very strong. And their year-end backlog, $15.2 million, even higher, $16.3 million if you include some early Q1 bookings. That signals future revenue lining up.
Okay, and zooming into just the fourth quarter, similar kind of picture.
Pretty much. Q4 revenue was $14.1 million, which, yes, was down 15% year over year from $16.6 million. But, again, look deeper. Wafer pack revenues were solid, $4.2 million. That's 30% of the total Q4 revenue, showing strong demand for new chip designs.
And the Incal products, the Sonoma, Tahoe, Echo systems.
Big contributor. 44% of Q4 revenue came from those package part burn-in systems acquired through Incal.
Now, the Q4 gross margin did dip quite a bit, didn't it? 34.7% versus over 51% last year.
It did. And they called out a few reasons. Lower revenue levels, obviously, but also a less favorable product mix, more of those lower margin package part systems shipped in the quarter.
Okay.
And importantly, higher manufacturing overhead. They were integrating Incal, renovating facilities, so less production going through while fixed costs were maybe a bit higher. Under absorption, basically.
And operating expenses.
Up slightly, about 6% year over year, mostly due to having Incal's operating costs on the books now, plus some higher legal fees. They mentioned protecting IP over in China.
Right. But despite those margin pressures, the bottom line for the quarter, the net loss, it wasn't a surprise.
No, it was actually right in line with what the street expected. A loss of $248,000, or negative 1 penny per share. Again, you have to ignore the prior year's huge one-time tax benefit for a fair look.
And crucially, cash position.
Very healthy. They ended the quarter with $26.5 million in cash, cash equivalents, and restricted cash. And importantly, zero debt.
That financial flexibility is key, isn't it? Especially given this massive strategic shift we need to unpack.
It's absolutely vital. And it explains why you see these sort of diverging trends between, say, reported revenue and the booking momentum.
So let's get into that shift. It's pretty stark.
It really is. The core story here is just how dramatically their revenue sources have changed.
Yeah.
Think about this. Fiscal 2024, just the year before last. Silicon Carbide was over 90% of their revenue.
90%, okay.
To fast forward to fiscal 2025, the year they just finished. Silicon Carbide is now less than 40%.
Wow, that's a huge swing in just 1 year.
Massive.
Yeah.
A complete reallocation of where their business is focused.
And the beneficiary of that shift is AI.
Artificial intelligence processors, yes. You mentioned it's 0% of revenue last year. Zero.
And now?
Now.
Yeah.
Jumped to over 35% of total revenue in fiscal 2025. Just exploded onto the scene.
Incredible.
And they highlighted 3 customers are now over 10% of revenue each. 2 of those are brand new customers, specifically in this AI market.
So this isn't just dipping a toe in. They've dived headfirst into AI.
Completely. And it's driven by some really pioneering work they've been doing, specifically in wafer-level burn-in for these AI processors.
Okay, break that down. Wafer-level burn-in.
So they've completed, validated, shipped, and got customer acceptance for what they say is the industry's first and, right now, the only wafer-level burn-in system designed for AI processors. It's called the Fox XP.
The only one globally.
That's what they're saying.
Right.
And this thing is a beast. Imagine testing these incredibly powerful, complex AI chips while they're still grouped together on the silicon wafer, before they're even cut up and packaged individually. This Fox XP system can handle up to 9 large 300-millimeter wafers simultaneously, and it pushes thousands of amps of electrical current through a single wafer. We're talking handling thousands of watts of power per wafer.
That sounds intense. Why is doing it at the wafer level so important for these AI chips? What problem does that solve?
It's critical because it can potentially eliminate the need for doing burn-in testing after the chip is packaged, or even later when it's installed in the system.
And why is that better?
Because finding a failure at the package or system level is way, way more expensive. Yield loss is much higher then. Think about it. Some of these AI processors cost thousands of dollars each.
Right.
The biggest players are shipping, over $100 billion worth of these things a year. If you can improve the yield by even a tiny fraction, like 0.1%, by catching failures earlier.
You're saving potentially huge amounts of money.
Exactly. Billions in value across the industry. It lets chip makers remove the known bad devices before they spend money packaging them, putting them on boards, shipping them. It cuts manufacturing costs, warranty costs, field failure costs.
Makes sense.
Plus, there's another benefit they mentioned apparently. This wafer-level approach uses less electricity from the grid compared to burning in packaged parts later. So operational and even environmental benefits too.
And they're working with a big name on this right now?
Yes, they said they're in an ongoing evaluation with a high-profile processor company that's expected to take maybe 1 or 2 more quarters.
And if that goes well?
Potentially significant high-volume production orders could follow. They also said they expect to start evaluations with other AI companies this fiscal year. The goal is clearly to grab a meaningful slice of that AI production burn-in market.
Okay, so wafer level is one big push, but that's not their only play in AI testing, is it? You mentioned Incal earlier.
Right, and this is fascinating strategically. They didn't just bet everything on wafer level. Yeah. Through acquiring Incal technology, they also got a line of products,
right,
the Sonoma line, for doing the more traditional package level burn-in.
Ah, so they cover both approaches.
Exactly. And according to them, Aehr Test Systems is now the only company in the world offering both wafer level and package part burn-in systems specifically for AI processors.
That's quite a unique position. What's the advantage there?
It gives customers options. They can come to Aehr Test Systems and directly compare the costs, the capacity, the factory floor footprint, the impact on final yield, comparing wafer level versus package level for their specific AI chip. It's a powerful consultation tool, really.
Yeah, I can see that. And the Incal integration itself, how's that going?
Sounds like it's gone well. They mentioned successfully migrating financials, HR, manufacturing, consolidating facilities, all that operational heavy lifting. And they estimate about $800,000 in annual cost savings just from the facility consolidation.
That's significant.
Plus, on the package part side, they landed their first production AI processor customer. And get this, it's a hyperscaler. One of the giant cloud companies making their own custom AI chips.
Oh, interesting.
Yeah, and they're already talking about ramping up production and plans for future chip generations with them.
So AI is clearly the headline grabber, but they aren't abandoning other markets, are they? They're diversifying beyond just AI and silicon carbide, too.
Correct. They're leveraging their core tech into other growth areas. Gallium nitride or GN, for instance.
Right, GNN, that's up and coming, too.
Definitely. They got an additional order for their Fox XP system, the same platform used for AI from a leading automotive semiconductor supplier, but for GaN devices this time. This expands their reach beyond silicon carbide. GaN has potentially broader applications, data centers, solar, consumer electronics. It's poised for big growth.
Okay, what else?
Well, even in a more traditional market like hard disk drives, HDD, a major customer, a top data storage company, started ordering multiple Fox CP systems again.
After some delays.
Yeah, they mentioned pandemic and tariff issues held things up, but now it's moving. And apparently this customer even publicly credited Aehr Test's Fox systems for helping achieve long-term drive reliability.
That's a nice validation.
It is. Then there's silicon photonics ICs, those optical chips for high-speed communication. Adoption is growing there for network switching and chip-to-chip links. Aehr Test has multiple customers and a new system with higher power and more automation for that market.
And silicon carbide isn't dead either, right? Even though its percentage is Down?
Oh, absolutely not. Still a significant market for them. They actually just shipped their first 18-wafer Fox XP configuration for Silicon Carbide. Huge capacity. It can test devices up to 2,000 volts, and they highlighted their proprietary tech to prevent arcsing at those high voltages.
Impressive. Any other emerging areas?
One more key one, flash memory. Specifically NAND and high bandwidth memory, HBM. They're working on a proof of concept with a world leader in flash memory for wafer level testing.
HBM. That's critical for AI performance too, isn't it? Stacking memory chips.
Exactly. And it's incredibly high value. They mentioned a new MEMS-based wafer pack, the interface that can handle very fine pitches, super high pin counts, technically capable of testing DRAM and HBM. It's in-house now, and they expect to finish benchmarking next quarter.
Why is wafer level so important for HBM?
Because with HBM, you stack multiple memory dice together in one package. If just one of those tiny dice fails after stacking and packaging, you often have to discard the entire, very expensive finished package. Catching bad dice at the wafer level before stacking, huge cost saver.
Makes total sense. Okay, so they're investing heavily to support all this growth and diversification.
Yeah, significant investments in infrastructure, capacity, facility upgrades, consolidation. And they plan to increase R&D spending, expand their teams, hire more talent, especially to support the AI side and improve automation.
And any update on those lawsuits that were hanging around?
Good news there, it seems. The class action and derivative suits were either voluntarily dismissed or dismissed without prejudice. Aehr Test maintains the claims had no merit, and importantly, there are no related proceedings currently pending. So that chapter seems closed.
Okay. So with all these moving parts, the AI ramp, diversification, investments, tariff concerns, what's the outlook? Did they give guidance for fiscal 2026?
They actually decided to temporarily withhold specific financial guidance for fiscal 2026.
Oh, why is that?
Primarily due to those tariff-related uncertainties we mentioned. They flagged potential risks of delay either in customer orders, their own shipments, or maybe supply chain deliveries. So a bit of caution there on the specific numbers for now.
But they do expect growth.
Yes. Despite holding back on exact figures, they said they anticipate order growth across all segments in fiscal 2026, with the possible exception of Silicon Carbide. For SiC, they see stronger growth, maybe pushing into fiscal 2027.
But overall optimistic.
Very much so. Management expressed strong optimism about the long-term opportunities across all these markets they're now targeting.
Okay, let's connect the dots. What does all this mean for you, the listener, trying to understand Aehr Test Systems' place in the world?
Well, I think it's clear they're positioning themselves right at the forefront of enabling these next-gen high-performance chips.
Especially in AI.
Especially in AI. But this pivot isn't just about chasing a hot market. It feels like a fundamental response to how chip manufacturing itself is changing. You know, with chiplets, with HBM, chips are getting bigger, more complex, harder to package reliably.
And the cost of a failure just keeps going up.
Precisely. So testing and burn-in, especially early testing like wafer level, becomes exponentially more valuable.
And the potential market size for AI burn-in?
They estimate it's 3 to 5 times bigger than the silicon carbide market they previously dominated. That's a massive runway for growth if they can execute.
Plus that unique advantage of offering both wafer and package level solutions.
Right. That dual offering gives them a strategic edge. They can genuinely advise customers on the best path, not just push one technology.
So while the Q4 financials showed some pressure.
Yeah, the margin dip from integration, the uncertainty around tariffs, those look like temporary factors, really. Necessary investments and consolidation noise. The underlying story, the bookings growth, the strategic positioning, particularly in AI, that points towards significant future potential. Margins should improve as volumes ramp up.
Okay, now for our segment that comes with the big flashing sign. This is not financial advice.
Absolutely, for informational and entertainment purposes only.
Yeah.
Investing has risks. Always do your own research, talk to a qualified professional, all that good stuff.
Right. So with that out of the way, any interesting, maybe slightly outrageous but plausible trade ideas come to mind based on this call?
Well, here's one to mull over. A potential pair trade. Consider going long Aehr Test Systems, ticker AIR, and pairing it with a short position in a, let's say, more legacy semiconductor test equipment company. One that's primarily focused on just the traditional package level burn-in methods.
Interesting. What's the logic there?
The logic is pretty straightforward, building on everything we've discussed. As these AI processors get incredibly complex and valuable, the economic argument for catching failures before packaging at the wafer level becomes overwhelming.
The yield savings just become too big to ignore?
Exactly. Aehr Test Systems, with its first mover, unique Fox XP system for AI wafer-level burn-in, is positioned as a critical enabler for that shift. They could potentially take share or at least capture the highest value growth, maybe at the expense of older, less efficient methods offered by legacy players.
So it's a bet on that fundamental shift in testing economics driven by AI.
Precisely. If the market starts fully appreciating the yield leverage and cost savings Aehr Test enables at the wafer level, especially for AI, you could see a significant re-rating of their stock compared to companies stuck in the older paradigm. It's a bet on efficiency winning out.
A bull idea, definitely one for the not financial advice category.
Without a doubt, but it flows from the strategy they laid out.
So wrapping up, Aehr Test Systems clearly painted a picture of a pivotal transition year.
Absolutely. Moving from being heavily concentrated in one market, Silicon Carbide, to this much more diversified portfolio. And crucially, deeply embedding themselves in the highest growth, most critical areas, particularly AI.
Their investments in new tech and capacity, that dual wafer package offering, it positions them as a potentially key partner for chip makers tackling these huge scaling challenges.
Yeah, they're trying to solve some really hard, really valuable problems in high-performance computing.
Which brings us to a final thought for you to ponder. In this world that's just absolutely starved for more AI compute power, where every tiny fraction of a % improvement in manufacturing yield translates into potentially billions of dollars. Just how much value does a company like Aehr Test Systems truly unlock for the entire semiconductor ecosystem?
That's the big question, isn't it?
Yeah,
It goes way beyond just one quarter's earnings report. It speaks to the fundamental value they could be creating.